Update there on the markets. Let's now turn to one of the key stocks driving the action, Meta, as regulators on both sides of the Atlantic ramp up pressure on that company. Today, the EU is saying that Meta has breached antitrust laws surrounding classified ads, and that comes as Meta faces the FTC here in the United States in court over its merger and acquisition strategy. Steve Kovac, our tech correspondent, has the latest developments for us here. Steve.
Hey there, Dom. Yeah, let's start with that EU antitrust complaint, which centers on Marketplace. That's the classified ads section of Facebook that everyone has. Now, look, the EU is saying it's making it hard for third-party services to compete with that Marketplace product. EU saying it gives Facebook users no choice but to use Marketplace to sell stuff. Now, Meta tells us the EU claims have no merit, and they're going to work through the process with regulators. But the fine could be hefty, Dom, up to 10% of Meta's global revenue. That was $117 billion last year, just for context. Now, the EU has been far more aggressive with tech regulations, even forcing Apple to allow third-party app stores in a couple years here. Meanwhile, let's go over to the U.S. in San Jose, California, where U.S. regulators going after Meta as well. FTC is suing to block Meta's acquisition of the VR fitness app called Within Unlimited. Meta's CTO, Andrew Bosworth, you see him walking in here, was testifying in that case today. Meanwhile, Mark Zuckerberg may also make an appearance defending the deal this week as the trial winds down, Dom.
All right, Steve Kovac, stick with us here. Let's bring in for the conversation Brent Thill. Covers Meta, a lot of these other social media names. He's over at Jefferies. Brent, Steve lays out an interesting case developing right now. It has echoes. It feels like deja vu with maybe Microsoft back in the day with the European Union, some of the problems that Alphabet and its subsidiary Google has had with European regulators in the past as well. Can you put it in context for us, Brent? How significant is Meta's problem with the EU compared to, say, Microsoft's or Alphabet's back in the day?
I think right now it's really hard to handicap, Dom. It's impossible. But I think we can say this, that Meta stock is embedding a lot of these key concerns, trading at a low-teen earnings multiple. It's the cheapest name in large-cap internet. So a lot of these concerns are already embedded. The number one question we get on the internet side of Jefferies is, what about regulatory for Amazon, Facebook? You go through the list. And ultimately, no one really knows exactly what the outcome will be. I have a hard time believing that 10% of their global revenue is fair for trying to put classifieds into a social media network where if you're looking for something, you should be able to find something that you'd want to buy or sell. Seems kind of common to do that. So I think the EU has probably been a little too overreaching. Obviously, you have the U.S. issues, and I think the U.S. regulatory is not going to get any easier. It may even get more difficult here as well. So I think this is an overhang for the group, and it's something investors should consider when they're coming into the group. But again, I think it's really impossible, covering tech for the last 20 years. It's impossible to handicap these situations other than to say they're already trading at discounted multiples, the fear of the recession, the fear of a reset to numbers still. We think a lot of that's in the stock today.
All right, so Brent, if that's the case, you have, in essence, in a way, handicapped it, right? You're trying to play the odds as best you can with the information that you have. So in your mind, at what point does Meta become that screaming buy if things are already built in and the stock has lost a tremendous amount of its market value over the course of the last 12 to 18 months?
I think everything starts to become more baked in early 23. And the reason why is that all these companies still have to clear the deck for the pending recession. Our house view, again, is that we're in for a hard landing, not a soft landing. As we go into next year, our economists have forecasted a bigger pullback later in the year in terms of the overall environment. So if that's the case and it's worse later in the year, this could be stretched out, and a recovery could be 2024. We hope that's not the case. But in that situation, investors will start to look at clearing the deck of numbers for the back half of 23, early 23, and won't start looking at these names probably until 24 numbers. That would mean it would be until the fall of next year, would be a bearish scenario when tech investors would start to come back in. Is it a possibility? We think it is, based on the overall environment. But I think ultimately Q1 and Q2 for overall tech are going to be very difficult earnings periods. And the realization of the headwinds that are coming in at us, I think will have to be put in. Now, the multiples have been compressed we need all the companies now to really fully cleanse the numbers, if you will. And once that happens, tech investors will jump back in the pool. Until that happens, they're not touching it. And you can see it today with all of tech down again.
Yeah, I mean, so Steve, I mean, it's a fair point. If you look at all these stocks right now, they are all down and they're moving lower. They're losing momentum. For Meta Platforms in particular, though, this is about leadership. This is about the person at the helm, the guy whose grand vision has led to the 2/3 of its value being lost over the course of the past 12 months. This is about Mark Zuckerberg and what the metaverse holds for Facebook/Meta Platforms. So what's the next story? What does he have to pitch investors on? What does he have to say with the benchmark that was met in order for us to say that we're moving in the right direction?
Yeah. And I'll just point out that some of his own people don't think he's moving in the right direction. Dom, just last Friday, John Carmack, legendary technological wizard, was the CTO of Oculus when they bought Oculus. If anyone believed in the metaverse vision, it was this guy. He quit, and on his way out the door, criticizing Mark Zuckerberg for the way he's executing the metaverse vision. So even the believers don't necessarily believe in the way he's going about it. But look, when our colleague Andrew Sorkin interviewed Mark at the DealBook conference, all Mark Zuckerberg had to say was, oh, we're focusing on the core business. We're focusing on WhatsApp. We're focusing on Instagram and Reels. Boom, people start liking it, eating it up. So as long as he can refocus the conversation, it seems, back to the core products, the actual money-making products, then it works out for him.
All right, there are some investors out there who've given a lot of companies like Amazon or Meta, in this case, some runway, I guess, to look at some of these things. All right, Steve Kovac, thank you very much for the thoughts there. Brent